Hello, everyone. Happy Sunday. This is Simon with AvaTrade. Welcome to our weekly webinar, Mapping Out Your Week Ahead. And just to explain the title to new people, what we try to do is simply create structure, make a plan for the upcoming week by analyzing, by going through certain things. And as traders like to say, you plan your trade and then you trade your plan. This way, your trading activities are going to be more organized, less chaotic, and less spontaneous. A few things about myself. My name is Simon Friedman. I'm a senior account manager with AvaTrade. I've been trading for close to 25 years. June is coming 25 years since I started as a prop trader in New York City. I did it for about 11 years, and then I moved into, as I like to call it, less stressful environment, continued to trade, and also started to mentor and educate others. And I'm very happy to have this great opportunity at AvaTrade to be assisting our customers. The agenda of the webinar will look through indices, stocks, commodities, Forex. We'll take a look at some fundamentals, including the economic calendar. Then we'll go to the charts and try to look at it from the technical perspective. Risk warning, everything we do here, of course, it's purely educational. We do not suggest any trades. We do not propose any signals here. Social media channels, please feel free to subscribe. You have Telegram, you have X, you have my favorite YouTube channel, where you can find a lot of material, including the educational material, tutorials, webinars. On YouTube, you can find all our webinars that are done live and recorded and posted on YouTube. So if you missed the webinar, or if you just want to browse through the past webinars that are available on YouTube, please subscribe, click on that like button if you like it, register, subscribe, click on the bell, you'll be notified for new things, and we'll be happy to hear from you on any feedbacks. Okay, before we go to the slides, as you know, I like to post them with some stories there. If you remember last week, we said about China and other things that are involved with tariffs, that these 90 days is just the waiting period and the issue is not solved. And guess what? Friday morning, President Trump couldn't hold himself, and he just went with saying that he's posting sanctions on Europe, also on Apple, other things, and market, of course, reacted to it. So that's exactly what we spoke about. When the issue is not closed, it's not solved, things are happening, and we can't really know what to expect, when to expect it, especially with someone so impulsive like Trump. And it reminds me his first presidency. At that time, he didn't have his own social media. He was using the Twitter back then, which is X today. So as my friend likes to say, we are living in a very interesting times. Okay, so let's go through the slides. Just a little overview of what we'll be doing today. We'll take a look at some articles really quick. And of course, most of it is related to tariffs. We'll take a look at winners and losers for the week. That includes futures, commodities and indices, and FX also had big moves as dollar index actually went down since all these announcements, and there's a downside pressure to it. We'll take a look at NVIDIA really quick, and that's it pretty much. Just try to put things together, prepare ourselves. And before I forget, of course, very, very important, Monday, the US market is closed. Okay, so that means that the stocks will not open. Some of the futures are going to be trading and closing earlier. So not to get confused and to be ready. I mean, for the stocks, you can't do anything anyway till Tuesday, till the stock exchange New York and NASDAQ opens the regular session on Tuesday. It's a Memorial Day. It's a federal holiday. The Americans are celebrating. So you can find the exact schedule. You go to avatrade.com. You have the trading info, and then you check for holiday schedules there. So you will know what to expect and when things are reopening. Okay, so here it is. Here are all reasons the economy is limping into Memorial Day. This is the article you can find on marketwatch.com. The rest of the article is also from there, but they connect it more to Barron's. So I just took some screenshots. So here, I think the key paragraph here is, meanwhile, economists, local businesses, leaders, and other experts from across the country describe crucial regional industries modeling along without a great deal of momentum. They say they're suffering from a lack of clarity surrounding policies coming from Washington, right? And the parade and so on. So, I mean, we all know it, and I think we have more uncertainties coming out. The stock market had a bad week. It's your fault. It's very bold statements here. It's from Barron's. Says right here, oh, Donald. It's kind of funny, but very sad. Just when the stock market was getting comfortable with your agenda again, you had to go and shake things up. There was your keyboard as so tempting, and you couldn't help posting new tariff threats on Apple and Europe, sparking a pre-memorial slump. There was your big, beautiful bill, which finally passed the House of Representatives, but spooked the Treasury market because it would increase the national debt by 3.1 trillion, including interest, over the coming decade. And don't forget the Supreme Court, which may or may not have given you the ability to fire the chairman of Federal Reserve. The S&P 500 fell 2.6% this past week. It's largest weekly low since April 4th. Okay, so they're blaming him. I mean, I cannot blame them for blaming him, because I guess that's the source, right? And we did have a large drop, second since April 4th, with the remember that huge board of taxes, the tariffs were announced one by one. Now Apple. We'll take a look at the chart later. The stock really dropped. Apple is unlikely to escape tariffs this time. Trump is doubling down. Let's just read it together really quick. Apple stock was dropping on Friday after President Donald Trump threatened a 25% tariff on iPhone sold in US unless the devices are made in the US. And he's kind of justifying it here. I have long ago informed Tim Cook of Apple that I expect the iPhone that will be sold in the United States of America will be manufactured and built in the United States, not India or any place else, Trump said in a post on social media platform Truth Social early Friday. If that is not the case, a tariff of at least 25% must be paid by Apple to the US, the president wrote. The president doubled down on his post in a meeting at the White House on Friday, where he told reporters that not only would he put tariffs on Apple if they don't move production to the US, but he would also place levies on Samsung and other smartphone product makers that import to the country to ensure fairness. He added that those tariffs would potentially start at the end of June. Kind of funny, because remember what the tariffs initially, when they came with that billboard of tariffs, and right after he said that it wouldn't be affecting cell phones and other electronic devices, and now I guess he changed his mind. So we'll take a look at Apple, see how it looks. But there's also some good news. Platinum actually moving, and I didn't pay attention to this, but it's good. These guys here at Barron's, they provided actually the statistics. So platinum had moved nice in the past days. So it says right here, platinum gets a glimmer of hope, but gold still rules. So platinum prices are starting to rise, and the rally could have legs. It has been a while since it was precious metal king. Remember, platinum used to be more expensive than gold, as it is kind of more expensive. In May, we'll understand more here. In May 2014, platinum traded at $1,500 an ounce, $200 more than gold. But since then, it has trailed gold. And Thursday, gold was at 3,323 an ounce, and platinum 1,017. It's a third of the price. Huge, huge spread, right? Platinum supply, this is interesting. That's kind of tells us the platinum should actually be more expensive. Platinum supply runs about 7 million ounces annually from mining and recycling, compared with more than 100 million ounces of gold. 7 against 100, right? Platinum has been in deficit for the past 2 years, meaning that demand has exceeded supply and the market has been drawing down overground stocks. The World Platinum Investment Council estimates that the deficit will continue in 2025. So what does it tell us? That the gold continues to be a leading instrument as far as the precious metal. We all know it. It's kind of a classic scenario, as we always mention, of safe haven together with Japanese yen and the Swiss franc. And platinum is not a classical thing, but as far as the value of it, it looks like it's more expensive, and it is in deficit. So maybe we'll see some catch-up game here on platinum, trying to catch gold in prices. So we'll take a look at platinum at the charts when we get there. Now, Feds, things are shrinking. The possibility or probability of the Feds cutting the rates for the next meeting, 18th of June, went even lower. A month ago, it was 57%, went to 8.6, currently 5.6% probability. And there's a big concern among analysts. They say that we might not see any rate cuts this year. Economic calendar. Let's take a quick look. And before we go into details, just to explain to people that are not familiar with this, this is public information. You can know it ahead of time, prepare yourself for your trading. You can choose whatever is relevant to your trading. You can access it at our web trader or the app, or just Google it. What I do here, I take out the high impact events only, as you can see everything in red, and the times here I set for GMT, kind of universal time for everyone. Is it important to have this information? I think if you are trading, it is very important, even if you're not using it, just to be aware that certain things are happening so you can avoid stress and chaos and panic when you see these spikes up and down on the big announcements. Okay. Chairman is speaking, I think, in front of Princeton University. That's today, actually, later today. President Lagarde speaking on Monday. Governor of Bank of Japan speaking on Tuesday. Wednesday. Now, again, Monday, the US markets are closed, right? We mentioned that. Wednesday, we have interest rate from New Zealand. Let's see if they catch up with Australia and cutting the rates. FOMC minutes for the last meeting. We're going to hear more details as far as the Fed's decision making and going further. So that's on Wednesday. Thursday, GDP numbers from US, inflation numbers, CPI from Japan. Friday, retail sales Australia, retail sales from Germany, together with CPI numbers from Germany, GDP numbers from Canada, and here core personal consumption expenditure number, and that's the numbers that the Feds are looking at very closely. So we have, as far as Fed's FOMC minutes, Fed chairman speaking, and we have the inflation numbers that the Feds are watching. And Saturday we have manufacturing and non-manufacturing PMI numbers from China, which is also important as China is really struggling, even with those tariffs put on hold. Things are not really so bright there. So again, these are the high impact events for the upcoming week. Winners and losers for the past week. These are the futures on the left and FX on the right. So let's take a quick look. So we set platinum. So the winners for the week: platinum up 10%, copper up almost 6%, gold up 5.35%, silver almost, palladium first, 4%, silver up almost 4%, and also wheat and corn made a move. about 3.5% each. On the downside, if you remember last week, cocoa made a huge move up. I think it was 18%, right? Now it's down 9.5% this past week, cocoa. S&P's down 2.69%, NASDAQ down 2.57%. These are the futures. And Dow Jones down 2.51%. So that's as far as the futures. The Forex, as you know, we had the big move in Bitcoin against the dollar, so up 5%. Since then, I think we went down a little bit. We'll take a look at the charts. Major currencies had a big move against the dollar. That just tells you the dollar is getting weaker. It's a huge concern over debt and other things. Pound almost 2% higher. Euro 1.76%, New Zealand dollar 1.75, and Aussie up 141. Dollar down against yen 2.11%, against Swiss franc 1.95, and against Canadian dollar 1.7%. So these are, we're going to take a look at all of these instruments individually when we get there at the charts. Okay, let's bring the charts, and we'll start as tradition. We start with indices, and here's China. This was the reaction on tariffs on hold. Since then, we're having a hard time breaking that key magical level 13,720, as we mentioned it many times. Let's see how it will react to this new tariff announcements on Europe and the cell phones. Japan as well has been sliding in sympathy with the US markets and others, and also yen has been getting stronger. That also pushes Nikkei to the downside. US indices, let's take a look at them here. They're part of the losers for the week, so we're not going to return to that again. But here we go. On the weekly chart, we had a drop. Daily, we did close below 200 moving average again, and we are, I think, below that previous resistance from end of March. We did have recovery though, so let's just take a look at dynamics here. This was the announcement right around 11 GMT on Friday. It was a strong reaction. The first hour went down, then a fake out candle here, and then moving higher, coming to this previous support, and then the last few hours of the day were sliding, but really that recovery held. So again, let's just think logically, right, on this example. You know, we know that Trump is you know, I don't know if it's the right thing to say playing games, but it looks like it, right? He places a harsh judgment, and then he makes things softer. I mean, you can use this analogy, right? He says, you know what, I'm just gonna choke you with tariffs if you don't do A, B, C, X, Y, Z, and then, you know, let's just make things softer. Let's put it on hold. Let's negotiate. So that's his style. And I wouldn't be surprised if we heard anything. I don't know, Monday's a holiday, but coming Tuesday, we probably hear something that Europe is, you know, processing it and thinking of softening tariffs for US or other things. I mean, it could be anything. So I wouldn't be surprised if we just had a bounce back next week, or we might actually continue with all the you know, negative things from concern of Feds, concern of big investors, concern in general of the economy not doing so great, and concern over the inflation, of course. So anyway, enough with philosophy. That's just something I wanted to share with you. So we did close below 200 moving average here, and below the previous resistance. Nasdaq looks a little bit stronger. We still are above the 200 moving average here, and above this previous resistance from end of March. Dow Jones, the weakest out of three, we actually crossed the 100 moving average here as well, and we are way below that end of March resistance here. So out of three, if you take S&P's, Nasdaq, and Dow Jones the weakest, Nasdaq's the strongest, S&P kind of in the middle. Germany, also a big reaction, as you know, of course, that's against Europe. So Germany, biggest European economy, reaction was very strong here. As you could see, drastic. We came within an hour. We came and reached the level of the 15th of May, and again with some spikes, we tried to recover a little bit of that move. UK actually reacted the least. I mean, it did react initially, but reaction was pretty much reversed here. As you know, not long ago, US and UK, they did sign the deal, they did close the deal. So I think they're the least affected at this moment. And actually, there's the least amount of uncertainty there because they had some specifics and specific deals closed. So as you could see, UK index actually closed almost flat on Friday after, of course, the initial reaction and then recovery. So these are the indices. Let's move to stocks, and of course, we'll start with Apple, as Apple was affected directly by that message of Mr. Trump or President Trump. There was a gap, right? There was a gap when the market opened because the announcement came during the European sessions. When the US session opened, there was a big gap in Apple, right? Let's see. The close on the previous day was 201.08, and the opening was 193.5. So it's about almost $8 drop. Immediately we had a move to the upside, and then probably retraced about 50% from the whole range and closed around 195. So let's see reaction. Let's see Apple's reaction. Let's see markets reactions, and of course investors reaction. Let's see what's happening. Now let's take a look at how the big guys or the big boys did the same thing. The market when it reopened on Friday, it was already affected by the announcement with the tariffs and the Apple. So most of the stocks, probably all of them, opened with the gap. Let's do hourly charts to see. All of them open with the gap, closing it partially, but not fully closing the gap. So definitely we'll see some continuation of actions the upcoming week and see how things are. Now, what caught my attention that the banks actually covered the gap. It was a big gap on banks, as you could see. An example on Goldman Sachs. We had the closing here at 597.80, opened Friday session at 581, about $6 lower, and take a look, we did close the gap and continued higher. So we actually had a positive day. We closed higher than the previous day on Goldman. JP Morgan, similar actions, gap and continuation, closing the gap and closing higher than the previous day. It just tells us that the banks are still solid and they're holding up very nicely here. Of course, there are a few things. The Buffett has been selling banks, and I think last week we mentioned it, or I mentioned to my group. I'm not sure if I did it here. The Buffett sold in the first quarter of this year lots of Citigroup shares. So Citigroup reacted to it over here. So banks are still strong. We're going to continue watching them, and if they are starting to slide heavily, they probably, not probably, but most definitely will add to the downside pressure of the market as a whole. Now, NVIDIA, this is the key point of the week as far as the earnings. We have NVIDIA reporting on Wednesday after the market close. Here we go, NVIDIA, same thing. We had a gap down. There was a big recovery as we, few things deal with Saudi Arabia, other positive things. NVIDIA had a nice recovery here above 130. This Friday, together with all other stocks, it kept down and then closed the gap, almost closed the gap actually, closing at 131. So definitely a lot of investors and analysts are waiting for that report on Wednesday after the market closed for NVIDIA. Okay, moving to commodities and futures. Let's start with the winners and losers really quick. Platinum, as we mentioned, a very strong move to the upside. We did break through the previous double top here, and we actually playing here with the level of a year-old level actually. The week of May 19, 2024, we briefly broke that level here. Let's see, approximate level, and with it, you know what? Let's do the exact number so we wouldn't get confused. Weekly. So the spike here was the high of 1104.40. Let's do that. 1104.40. Okay, let's see if we did touch it. The high here was 1103.80, a little bit shy, 20 or 60 cents shy from that high of a year ago. So definitely something's happening. This is the weekly chart. Take a quick look. Since we came back into this channel, we just had to move up, and this past week, it could be, of course, the short squeeze. It could be buyers coming in. Definitely, it's a combination of both. And take a quick look. We are moving higher the whole week. Every session, we had a positive session. And if you take a look at the monthly chart, there was a lot of accumulation here. Take a look. This past move came from the high of February 2021 when we hit 1347. We came back, we retested the previous support, came back, and then take a look, zigzagging for a very long time until this month we broke through the previous many months of struggle. And the next checkpoint is the month, as we said, the month of May of 2024, where the high was 1104.40. So let's see if we do break this level, we might continue higher. And I mean, article is a serious article, and some people might see it as a investing opportunity. So definitely we'll continue watching. Platinum, which was the champion for the week, up 10%. Next one is copper. Also had a strong week, up 5.91%. I guess in sympathy with metals, because China didn't really do that great, and the markets went down. So it could be a try to retest these previous highs. It could be a try to break through it and go higher. It could be also a try just to shake the buyers. Sorry, shake the sellers and shop for liquidity in order to come right back down. Anything is possible. But metals in general was strong, so it could be just a group action, right? I don't know if that's the right thing to say. Here we go. Gold. If you remember, we actually set up these trend lines up and down and see which way we're going to break, and it looks like we're breaking to the upside on gold. Gold was up 5.35%, and we are testing the trend line connecting the previous highs. So safe haven is in play, a lot of uncertainty. Also, we mentioned that China might convert US dollars into gold, and other central banks are continue loading on gold as protection against inflation. So here's gold trying to run higher from here. Next one is palladium. Also, we had a nice move, a weekly gain of 4%. The last two sessions we went down, but we started the week very strongly here. Silver as well, looks like it's catching up with gold, as it happens a lot. Weekly gain of 3.97%. We are on the way of recovering this big drop that we had on the week of March 30th. Next one, of course, the grains, wheat and corn. Finally, they show some strength after a lot of actions to the downside, making lower lows and lower highs. It could be that we're trying to get out of the woods here. We did close above the 50-day moving average here on the wheat. Let's take a look. The weekly chart looks. It's still sitting here at these levels, collecting, accumulating. Which way it's going to take it? I guess we'll find out soon. As of now, we did have a hard time breaking through 50-day moving average this past week. We did break. We actually tried to break through the 100, and we almost touched, or we did touch the 200 moving average on Wednesday here. And this is a nice profit taking, holding above 50-day moving average. There is a probability or possibility of wheat moving and trying to turn the trend to the upside. Of course, the opposite is possible as well, and corn as well. We had a strong week for corn, almost 3.5%, 3.49. Similar situation here. We actually in a better situation on corn. We are above the 200 moving average, and we are trying to break above the 50. And the weekly, it looks like this support at around 442 was holding nicely. And after the accumulation here and 3 attempts to break through it, right? 1, 2, and 3, we could be trying to break to the upside. And here we have a nice trend line that we might be facing soon. And if not, we might come down and retest the 442 level again. That's corn and cocoa. As we said last week, it was a strong move to the upside. This week we erased about half of that move. It's hard to say anything. This is all fundamentally driven. The lack of short supply of cocoa from West Africa is still there. So could be anything. Of course, trading is speculative and manipulative. We could see moves, from this recent move from the supports around 8,500. We did move higher nicely. We did break the previous resistance here in the past 2 days. We went below that, still above 50, 100, and 200 moving average is still definitely an uptrend. Let's see how this correction works. This is a temporary correction before we have another zigzag to the upside, or we are on the way testing maybe 200 moving average, or maybe this level right here, 94.81, when we just had a double top before breaking the previous week, right? Okay, that's corn. That's cocoa, and we did speak about the indices. Let's move to FX, the popular FX. As you see, dollar after hitting the 50-day moving average, dollar index is sliding, and not only that, we have volume increasing. So as we go lower, volume comes in, the sellers are coming in more and more. That's a sign of weakness, a solid sign of weakness. Now, as far as the gainers for the week, pound just broke through the previous resistance here. Let's see on the weekly chart. It looks very strong. Breaking from here, it could take us to higher levels, maybe 200 moving average eventually, if we are continuing seeing weakness of the US dollar. And that potentially would bring us to this resistance all the way to June of 2021, 4 years ago almost. Possibility is there. Take a look. So far, we're 4 months to the upside on pound. Euro, similar situation, much weaker than pound. But we're up 1.76% for the week. And the weekly chart, this previous resistance, if you look left, was week of July 16th of 2023. We're trading above that. We did have a nice breakout here. This is the week of April 6th. This is the tariffs and other things that put the market down, and caused weakness of the dollar as well. Then we had 4 weeks a correction here. Important to set up some levels here. So right here, back in the week of September 29th, we made a lower low. So this is a serious level here around 112. So we did break this past week. We broke through that level, and we kind of recovered the previous 2-3 weeks of losses. Well, we still, if we continue higher, we need to check this level here around 115.70. So that's on euro. New Zealand dollar also was up 1.75%. Let's see something. Again, when I draw this trend lines, just visual reference. Nobody promises that we'll break them or the opposite will happen. But it's important. As you could see, we are holding the uptrend here. And if we continue, this was a strong day on Friday. If we continue, we might actually get to test the trend line, which connects the previous highs here. So that's New Zealand dollar. Australian dollar as well looks very strong here. If you connect the previous highs, we actually broke it already and closed higher. So Australian dollar technically looks stronger than New Zealand dollar, but both of them actually moving higher nicely against the US dollar. So if we continue here, this high of May 6th, which was 0.6514, could be challenged. And let's see the monthly chart. The monthly chart, this could be the beginning of a huge move. Take a look, 4 consecutive months to the upside. And there's not really immediate resistance till the level of October 2024, which was 0.6934. So as you could see, across the board, dollars are getting much weaker and the major currencies are moving higher. That brings us to dollar yen here. Monthly chart looks like we're hanging in the air here, possibly ready to drop lower. You could see here, we did have a nice recovery from the recent lows. Here we made higher highs, high lows, and then the past 2 weeks we just went down, retesting this support here around 142. That's on dollar yen. Dollar Swiss, we did have a strong resistance here around 50-day moving average, and since then we've been sliding lower, coming to the zone where a lot of actions happened. Somewhere here around 181, 182, we might be facing either support, or we can just break through it and go to 181. That's what this move happened. As you could see here, this move to the upside, didn't really care about this 181 level, just moved higher. So anything is possible. If we continue hearing negative things on dollar and US economy and other things, as you know, also we had this rating cut by Moody's. So things are not adding up in a positive way for the US at this point, obviously. So we might see a continuation, the weakness of the US dollar. USD CAD, you remember, it couldn't be broken. We just went higher and higher and higher until we hit January 26th, the week of January 26th. The very next week, we just erased that week. And since then, we've been slowly, sometimes not so slowly, moving lower. We came to the zone below 138. This was this line here where we had a lot of resistance. We did have some support here, as you could see the moment we came to that level, and this past week we just broke through it, and on the high volume as well. So USD CAD has a potential to continue lower, and if that happens, we might be moving to around 134 level, which would be the previous strong support here, from which we made a high. Also would be around 200-day moving average here. That's it with Forex. Let's take a quick look for dessert at Bitcoin and Ripple. We had a lot of excitement here. 110, everybody was screaming. We came all the way to almost 112. This was on the 22nd. And then the tariffs came on Friday. I don't know how it directly affects Bitcoin, but the reaction was strong. We almost erased the previous 2 days. We are not only below 110 again, we are below 107. And we close to that key level that we mentioned, I think, last week, around 106,400. That was the resistance back in January 30th. So let's see if we're holding this 106.4. And if we are, we might be shopping for higher levels. Again, a lot of speculations, a lot of manipulations as the market is doing what it's doing. Ripple, it didn't really move strongly when the Bitcoin did, and that caught my attention. So it looks like it's drying up a little bit here. If you remember, here in January, when Bitcoin had a fresh high, we just went through it on Bitcoin, but Ripple is not really doing that, right? As you could see here, we are having a hard time moving higher with the Bitcoin moving higher. So we are around 200 moving average here. It's catching up. We're sitting on the 100 moving average here on Ripple. That's it pretty much on the technicals. Again, please do not forget to sign up, to subscribe to our social media channels. If you are watching this on YouTube, don't forget to click likes. If you like it, share with people that might benefit. Write your comments, questions if you have some. Let's just summarize what we spoke about. It's all about tariffs, and it's been about tariffs since Trump came in, right? So a lot of uncertainty. This week we have a few important events as far as Fed's Powell speaks today, FOMC minutes, and the inflation numbers. Other things, of course, important. Winners and losers for the week. They tend to continue the week in the same direction. A lot of times they reverse, like Coco did from last week. We'll be watching that. We're definitely going to be watching Apple with the new tariffs news. NVIDIA highlight of the week for the earnings on Wednesday. And we hear some, we'll probably hear some feedback from Europe on this last development as far as tariffs. I want to wish everyone a good weekend. Enjoy it, get some energy, spend some quality time with your loved ones, and prepare yourself for the intense week. Don't forget, Monday US markets are closed. Thank you very much. And about next week, I will be traveling for work. We are going to be in Cape Town at the conference there, Financial Magnates, I think. So if you want to meet us, please come visit. I will probably do the webinar the beginning of the week when I come back the following week. So we'll keep you posted. Have an amazing and successful week, and all the best. Take care.